everybody, Tony Hellenbrand here, Safeguard Wealth Management. Today we're going to talk about an article that I think 4 or 5 people sent to me over the weekend. So I got it once or twice late last week, but then over the weekend I was getting pounded with a whole, literally every couple of hours. I got this exact article that we're going to talk about in a second. Before I dive into it and show why there's kind of some misleading information in here, I actually want to jump back onto our channel real quick and just say, if you're not subscribed to our channel right now, a lot of feedback that we get when I talk to people that find us through YouTube is they'll say, man, I've watched all your videos, and then we have a 10 or 15 minute conversation, and I send them links to 30 more videos that are like really relevant to their situation, and they go, oh man, I had no idea that you guys had so many videos out there. And if you're not subscribed, you're not getting updates to all of our content as soon as it's released. You might get it suggested to you, a few days later, but make sure you click that subscribe button to see all of our freshest content as soon as it arrives on YouTube. Now with that, I'm going to jump back over here to Market Watch. We're going to keep going through this. So this is an opinion piece. I'm glad they called it out as opinion, because some of the earlier versions of this I was seeing, it did not say opinion there, but it says Congress is about to kill this popular retirement tax move. So let's see, they've updated it a few times since it was originally published on September 29th. Let's scroll down here. I'm gonna go ahead, drag this over here, and let's actually minimize this guy too, so we can focus on the good stuff in the article. So it says, if you are planning to do a Roth IRA conversion to keep your retirement savings permanently out of the hands of the IRS, you might want to get on it. And I agree with it so far. It says the new tax bill on Capitol Hill is going to scrap these conversions for everybody at the end of the year, and no, not just for those earning more than $400,000. Okay, so what I actually want to do here is jump. This is not the bill. This is a report to the House Ways and Means Committee. So the way that tax legislation is created in the United States, it starts in the House Ways and Means Committee. Once it passes that committee, it moves on to the House of Representatives. Once it passes the House of Representatives, it moves to the Senate Finance Committee. After the Senate Finance Committee, it's voted on by the Senate. When the House and Senate agree, you got a new law, new tax legislation. A lot of fun stuff for us. So this is a summary of the bill that was given to the House Ways and Means Committee. And what I want to do here, I'm going to hit Control F, and we're going to type in conversion. Okay, so right here, subpart B, let's see if we can even blow this guy up a little bit too. Get this out of there, zoom in on this a little bit. There we go. So it says subpart B, section 138311, tax treatment of rollovers to Roth IRAs. Okay, and down here, I'm going to skip ahead a little bit, but it says, in 2010, similar income limitations for Roth IRA conversions were repealed, which allowed anybody to contribute to a Roth IRA through a conversion, irrespective of the still in force income limitations for Roth IRA contributions. So, and then I was going to give an example, but it says right here, as an example, if a person exceeds the income limitations for contributions, he or she can make a non-deductible contribution to a traditional IRA, and then shortly thereafter, convert the non-deductible contribution from the traditional IRA into a Roth IRA. So this is known as a backdoor Roth conversion. There's also something called a mega backdoor Roth IRA conversion. And they're making an effort here. This is what they specifically call out. In order to close these so-called backdoor Roth IRA strategies, the bill eliminates Roth conversions for both IRAs and employer-sponsored plans. So that was the mega backdoor Roth IRA. Closes those loopholes for single taxpayers with taxable income over $400,000, married taxpayers filing jointly with taxable income over $450,000, and heads of households with taxable income over $425,000, all indexed for inflation. This provision applies to distributions, transfers, and contributions made in taxable years beginning after December 31, 2031. So a couple key points here. Number one, they are trying to eliminate backdoor and mega backdoor Roth IRA conversions, but you'll notice it says this applies to distributions and contributions made after December 31st, 2031. So we'll probably do a video here on backdoor Roth IRA conversions, mega backdoor Roth IRA conversions. If Eric's already beaten me to this, we have so many videos on our YouTube channel that Eric's put out. I can't even keep up with how many we have. We might have a couple videos on mega backdoor conversions. So if we have that, Eric, link to it. Make sure you guys are subscribing so you can see all the newest stuff. But what you'll notice is a couple things. Number one, this is not talking about conversions for those making less than 400,000 or less than 450,000 married filing jointly. So that's completely on the table. B, the backdoor conversions are still on the table until December 31st, 2031. And even beyond that, it seems like there may be some ways to work on that and maybe possibly even get conversions after that date. So here's the thing with all this stuff, guys. If you're not familiar with Roth IRA conversions, I highly suggest you go watch 3 or 4 of our videos about Roth conversions. They should be the core piece of many people's retirement plan. I will not say that they're a fit for everybody, but I will say well over 90% of the clients we work with have a Roth conversion strategy as a core piece of their plan. It's super valuable. For the average client, you're talking about 6 figures in tax savings on a Roth conversion strategy. There are a few people they don't fit for, but this piece, if we jump back over to MarketWatch here, I used the source report that he used to write the article and came to a completely different conclusion. And he says some other things in this article that I think are provably inaccurate. I'm not saying that anything intentional is going on, as far as trying to skew the truth or anything like that. I just think it's a matter of people. This is very technical stuff. If you're not immersed in this stuff all day, every day, it can get complicated and confusing. And, if we jump back over to the bill here, I mean, it's clear as day. It says, we're going to eliminate conversions for those over 400,000 that are single, those with taxable income over 450,000 that are married filing jointly. And if we continue to search through the rest of this bill for the word conversion, okay, so it appears 3 times. There's the first one that we kind of read through. There's the second one, and there's the third one. So the only time conversion is being talked about in this entire piece, I mean, you could even go like this, type in the word convert. It only appears right there, same deal. Prohibits all after-tax contributions and qualified plans, prohibits after-tax IRA conversions from being converted to Roth regardless of income level. So again, we're talking about here, prohibits employee after-tax contributions in a qualified plan and prohibits after-tax IRA contributions. So again, they're targeting that backdoor Roth conversion. They're targeting just the non-deductible IRA conversion. They're not talking about allowing you to turn traditional IRAs into Roths, which again, I think is highly valuable for a lot of people out there. I recently read a study from Dave Ramsey. It said there's 17 million millionaires in the United States. I saw another study from a related group there that said there's 10 million people in the United States that have more than $1 million in retirement savings. I would guess there's probably more than 5 million people out there that have more than $1 million in traditional IRA. If you're in any of those groups of people and you are not using Roth conversions, I think you're leaving a lot of money on the table. So please, not only check out our content, subscribe to our channel, make sure you're watching everything you can learn, not only from us, but there's some other great channels out there that talk about the merits of Roth conversions. This is something I'm really passionate about. I think it can save the average person literally hundreds of thousands of dollars in retirement, in taxes, which taxes are your largest expense in retirement. So I'm getting a little off track because I'm getting a little bit fired up, but moral of the story, conversions are here to stay. The IRS likes conversions because they're basically getting their payment up front rather than forcing that money out on RMDs down the road. They'd rather get the money up front. So they like conversions. Conversions are here to stay. There's no other points in this bill where they talk about getting rid of partial Roth conversions or regular traditional IRA to Roth IRA conversions. They are highly targeted to those with taxable incomes over $450,000 and those doing backdoor and mega backdoor Roth IRA conversions. So this is Tony Hellenbrand from Safeguard Wealth Management. Thanks so much for watching. And just remember, you don't need more money. You need a better plan. Thanks, guys. Make sure you subscribe.